Welcome to the Hughes Optioneering Weekly Workshop, where we scientifically engineer trades for greater profit potential. This is the disclaimer slide. You can pause to read it. We're going to move on. Today we're going to look at PRCT, or PROCEPT BioRobotics Corporation. PRCT is a commercial stage surgical robotics company. Here's the barchart.com technical opinion rating for PRCT. The bar chart rating is a 100% buy with the strongest short-term outlook on maintaining the current direction. Long-term indicators fully support a continuation of the trend. According to Prime Trade Select rules, a stock is in a bull trend on a monthly basis if the stock price is above the 10-period or 10-month simple moving average. The monthly chart shows that PRCT is well above the moving average line, so the monthly trend in PRCT is up. Now we're going to look at the daily chart. A stock is in a bull trend on a daily basis if the 50-period or 50-day exponential moving average is above the 100-day exponential moving average. The blue line is the 50-day EMA line, and the green line is the 100-day EMA line. The blue line has been above the green line since December, so the daily trend in PRCT is up. Next, we're going to look at a daily chart that displays the Keltner channel. As a rule, we don't want to buy calls if the stock price is above the upper Keltner channel line. Anywhere inside the Keltner channel or even below the Keltner channel is fine. PRCT is below the upper Keltner channel line, so PRCT is inside the buy zone. Since the trend is up, we want to buy a call. PRCT has 4 option chains to choose from. We're going to use the October 18 option chain. Right now, the October 18 options have 41 days to expiration. Here's most of the PRCT option chain for October 18. PRCT closed at 76.60 on Friday. That means any calls on the list from 25 to 75 are in the money. Let's take a look at the profit potential for purchasing the 77.5 strike call, which is the closest strike to the current price of the stock. The bid-ask spread for the 77.5 call is 470 to 610. We try to enter at the midpoint, so we'll use 540 as the buy price. Our call option calculator shows the profit potential for this call based on PRCT price changes at option expiration from flat to a 12.5% increase in price. We can see that if the PRCT stock price is flat at 76.60 at option expiration, the 77.5 call will lose 100% of its value. Ouch, this is an unacceptable risk. That kind of loss can wipe out our trading account in a hurry. We developed what we call the 1% rule to help us avoid this kind of risk. The 1% rule says to limit the time value portion of the option we buy to 1% of the stock price. That means the stock only has to move up 1% for the call option we purchase to break even and start profiting. Now let's take a look at buying the 65 strike call to see if it qualifies for the 1% rule. Here is the call option calculator picture for the 65 call. According to the 1% rule, we want the call to at least break even if the stock price is up 1%. The calculator picture shows that if the PRCT stock price is up 1%, the 65 call will lose 7.7% of its value. We want that to be break even or better, so the 65 call does not meet our requirements. Let's see if the 55 call will work. The bid-ask spread for the 55 call is 20.50 to 24.10. We tried to enter at the midpoint, so we used 22.30 as the buy price. The 55 call works. If the PRCT stock price is up 1%, the 55 call will make a 0.3% or $7 profit. That's better than break even, so the 55 call is the one we'll buy. The call option purchase calculator also shows that if the PRCT stock price increases by 2.5%, the 55 call will make a 5.4% or $122 profit. If the PRCT stock price increases by 5%, the 55 call will make a 14% or $313 profit. If the PRCT stock price increases by 7.5%, the 55 call will make a 22.6% or $505 profit. The 10% and 12.5% numbers are also displayed. You can see that the profits get better and better. And notice that if the PRCT stock price does not make the expected move up and it remains flat at expiration, the 55 call would only lose minus 3.1% or minus $70 compared to the minus 100% or minus $540 loss for the 77.5 strike call that we looked at earlier. Now we want to review a call option debit spread, aka a vertical call spread. For this spread, we want to buy to open the PRCT October 1860 strike call and sell to open the PRCT October 1870 strike call. We're going to base our entry prices on the midpoint between the bid and ask prices. That means we'll buy the 60 call for $17.80 and sell the 70 call for $10.25. $17.80 minus $10.25 equals $7.55. So the entry price or debit cost for the spread is $755. The call option spread analysis calculator picture shows that the spread will make a 32.5% or $245 profit if the PRCT stock price declines by 7.5%, remains flat, or increases in price when the options expire. Creating the debit spread will allow us to collect a $1,025 cash credit to our brokerage account for the sale of the 70 call. As we said on the previous slide, this reduces the cost of entering the spread to $755. Here's a note regarding earnings reports. The next PRCT earnings report is scheduled for October 31st. Let's review the trades one more time. The first trade was a call purchase. Said to buy to open the PRCT October 18 55 strike call for $22.30. We also reviewed the spread. The spread said to buy to open the PRCT October 18 60 strike call and sell to open the PRCT October 1870 strike call at a debit of $755. That's it for this week's Optioneering Workshop. Thank you for joining us. We look forward to seeing you again next week.